Hello everyone. Please, this is the sound check. I see that we already have a lot of viewers in the chat, so tell me, can you hear me properly? Can you see the display, the first slide of the presentation? Simply type something to the chat, +1 or hi to everyone that is online, who are online right now. Please let me know is everything is clear and we may start. Hello. Okay, great. I can see. Thank you that you responded. I can see that you can hear me. So that is amazing. It's 4 o'clock right now, and we may start. So good day to everyone. I'm really happy to see you all here joining us today on our first time webinar. Today we have the amazing topic to discuss. Actually, the first steps you should know before making your trading activities. Our plan is to discuss what is the Forex overall and how you actually may benefit from trading with it. We will discuss and I will explain you the main principles and basic principles how to make the analysis. We will make some calculations with you and discuss the specific terms that you should know before making your first steps on the Forex market. So let's start from the very beginning. And probably you all have the question, who is your host today? So let me introduce myself. My name is Gleb Stepchenko. I'm the financial analyst with Just Forex and the part-time trader myself. My trading journey began back on 2013, and this is exactly the time when I started to consider and thinking about trading, about the financial markets, what exactly are those and how I actually may participate with that. Starting from that, I decided that this is something I really like and started to develop myself as a trader and as a person. Right now, I'm working as the financial analyst and working as a part-time trader. So just combining the both things I really like to do, specifically working with the currency pairs, commodities market, but recently start to make researches on the United States stock market and European stocks, since Just Forex allows the clients to work not only with the Forex but with the other markets as well, and the current situation is really amazing to explore those. So hopefully in future we will be able to make those researches as well together. As to the way how do I prefer to trade is basically the technical analysis, the price action analysis, only the naked chart. This is something that really suits me better, and I've tried a lot of strategies, actually made a lot of strategies and been using them for quite some time, but within the time actually realized that the easier the system, the better it is for me. So one of the key points for every trader is simply to find what exactly suits the best specifically for you. So let's start from the beginning of our presentation and exactly what is the Forex and actually how it works. So simply let's imagine the example that you have $100 and you wish to change that $100 to, let's say, 2 euros. What do? You simply go to the nearest currency exchange and you make this transaction. You're simply selling that 100 and you're getting, let's say, 98 euros for your $100 that you have. So basically right now you made the transaction, you changed one currency to another, and let's say within the time you wish to make that same transaction, you simply want to give back your euros and get back the United States dollars. What you also go to your nearest currency exchange and give the 98 euros, and now you get, let's say, $106. What does it mean? The currency rate changed and you actually made $6 by simply changing one currency to another. So actually you made some profit from your a first trade. So Forex market is the place where exactly that kind of transactions are happening on a consistent basis. This is the market where the biggest investment funds, where the biggest banks, where the huge corporations are making that kind of transaction. They are simply changing one currency to another. They have different purposes for that, different targets, but all they do simply make that kind of transaction. And latest statistics shows that the overall daily volume of that kind of transaction exceeds $5 billion. So simply imagine what is the potential and what are the possibilities simply by joining this market. And we are, as the retail traders, as the individuals, we are actually the smallest fish in that pond, but still we have this amazing chance simply by trading and working with the actually with all the money that we have in the world, because forex is something that actually is not centralized. It is decentralized system that works basically every time. It works 24 hours a day, it works 5 days a week. So specifically during the week there are plenty of possibilities, plenty of opportunities simply to work and to trade with. And actually, how does it work? It is really easy because we have different trading sessions, and actually dependingly from the time when the banks are open, we have the different trading sessions. So the first session starts with the Pacific time when Sydney opens, and this is the first period when traders are starting to make their first transactions. And then every trading session follow one another, and we have almost all the day simply covered with the trading possibilities. And let's say if you have your daily activities, uh, if you're learning or you have your day job, so simply you can choose the specific time when it is more convenient for you to work, to trade, and find the opportunities at this market. So this is actually one of the greatest opportunities and one of the greatest bonuses that Forex market gives you. Because, for example, if we talk and compare the stock market that works only within the specific trading hours, Forex works actually 24 hours a day, and the only time when you can have a rest from the charts are during the weekends. Uh, when we understand exactly what is the Forex and how it actually works, we need also to discuss exactly what we are working with there. So as we mentioned, the main instrument of Forex is different currencies of countries around the world. And there are several types of currencies that used to be popular, and they are really different in their specific terms. So let's start from the major currency pairs. Those are the pairs that are the most tradable pairs in the world. Those are the pairs that are commonly traded by all the traders around the world. Basically, there are 7 currencies: euro, British pound, yen, Swiss franc, Australian dollar, New Zealand dollar, Canadian dollar. Those are the main currencies, and those currencies are highly popular and traded around by the traders all around the world. However, let's say there might be the situation when you want to buy or sell one currency that doesn't include the United States dollar in it. So for example, those kind of currencies are called the minors. So the currency that doesn't have United dollar in it is this is the currency that is used to call cross currency pair, and those kind of currencies actually are less popular than the majors because they are not so highly tradable by the all traders around the world. But still, you need to understand that there is the possibility for you also to work with that kind of currencies as well. And besides the majors and minors, we have the so-called exotic currency pairs. Those pairs, basically the currencies of the countries with an emerging market economies. So basically those pairs are not so popular around the in the trading world because actually they are not so popular with all the traders, but definitely there's also the possibility to work with that specific currency and look for the opportunity to work with them. For example, we have the South African rand, we have the Mexican peso, the Turkish lira. So all those countries, all those currencies are also available on the market for you to trade. But for the beginners, for traders who are simply making their first steps, it is advisable simply to start with major currency pairs. Believe me, that is pretty much a lot for you to start with, simply with the easiest way, simply with the most popular currencies and most popular ways how you may look for the opportunities there. Uh, all right, so right now, when we discussed exactly what is the Forex and what you may do there, what currencies you may work there with, let's continue and discuss more about the way how you may make the analysis, how you may actually predict the price movement. And for that purpose, let us start from a simple example. Let's say you have a bicycle, right? You have a bicycle, and for you to ride that bicycle, what you need wheels, right? So for you to have, so that wheels actually for Forex, the wheels are the technical analysis and the fundamental analysis. Those are the means that you may use to actually analyze the market and actually ride through the Forex market. So let's start from the technical, from our first wheel, technical analysis. Basically, technical analysis is something that is called the chart analysis. So main purpose of the technical analysis and the main terms how to do that is simply by using the specific chart patterns, the specific technical indicators, and use the different combinations of them simply by analyzing the historical data. So let me show you an example straight away, an example from our platform. Right now online we have the MT5 platform, MetaTrader. We have the chart of the Euro USD and the H4 time frame, the 4-hour time frame, simply with already made analysis just for you briefly to understand what exactly are those. You can see a lot of different lines here. So basically the lines, those lines are called the levels, support and resistance levels. Those are the levels that are commonly used by traders to identify where exactly price may reverse and expect certain activity of other traders around the world on that specific level. So as you can see, the chart actually has a lot of lines, and simply by following that lines we can see that basically price usually reacts on that specific levels, and we have definite reaction on it. Other tool that we may use is called the trend line. The way how to build it, usually we need 2 points to use it, and as you can see it may be used for by the traders as the additional instrument, simply to understand what is the bias and where probably market will go. So also in technical analysis we're using different chart patterns, wedges, flags, channels, different patterns that are based on the candlestick. So these all are things that we are planning to discuss with you in upcoming videos. So for now, we are simply talking about the simple things, right, about the basics for you, just to understand how the chart basically look and what are the methods of making that kind of analysis. And only by this, there are not only the tools of the graphical analysis that you may use. Actually, you may use the indicators, the specific technical indicators that are available at your MT4 platform. So just briefly show you a few of the most popular. So let's say we'll use the moving average. This is commonly used indicator by the traders actually around the world. And let's say the 200 period moving average. Actually, this indicator shows us the bias of the market, shows us exactly where the price is going to. So the easiest way to use it, simply to look for the signals to buy the asset when the price is above the moving average, and when the price is below it, definitely it is better to look for the sell options. So we may have several moving averages available on our chart. So this, as I told you, those are the things that we are planning to discuss in our upcoming videos. So stay tuned. Don't forget about the things that we are going to discuss in future. So this is all basically what we can say about the technical analysis on chart right now. And also I would like to show you the way how you may use technical analysis and where exactly you may look for it. We have the amazing analytical section on our website. Probably if you didn't use it, I highly suggest you to have a look at it, and actually to use the daily forecast option, because here there is something that we are doing for you in case that if you are just making your first steps and you do not have a lot of experience in making the technical analysis. So you can easily look through what we are providing for you. We have actually the analytics of the major currency pairs within the day, with already made analysis, with already made and depicted support and resistance lines. So everything basically that you need before starting your trading day, you can easily find on our analytical department, with the help of our analytical department, with the forecast that we provide. So easily feel free to use it, and definitely you will have the benefits of doing that. So that is everything that I would like to say about the technical analysis right now. And let's proceed to our second wheel. As we spoke, the second wheel of our bicycle, of our trading bicycle, is the fundamental analysis. And what is the fundamental analysis? So it is something that is definitely not the same as the technical. It is the way that traders usually analyze the market by paying attention on the different economical data. So as we are working with the currencies of different countries, so actually there are a lot of news, a lot of reports that may influence the price of the currency. So actually the fundamental trading is based on analysis of those events and on possible price reaction dependingly from what kind of reaction were there. So for example, for now, what is happening, we have the huge impact of the coronavirus news on the markets. So probably you've noticed that whenever there is any news about the coronavirus, definitely market become to be shaky, and a lot of unpredictable movements may happen. So this is the influence of the news, and that is why it is always important to be aware that something might happen there, and simply to control what kind of news and what kind of reports may be there within the day. And the really useful tool for that is the so-called economical calendar. This is actually the specific way and specific tool where you can look for the events, where you can look for the reports, because basically the reports is something that is happening on the consistent basis. It is something that you always can find the economical calendar, and actually to be prepared for that. And also I would like you to pay attention how you may use it. Let's get back to our site again, and we actually have the economical calendar here that you may use. It's also in the analytical section. So let's have a look how exactly you may use it. So right here you can see all the events that already done and all the events that are upcoming. So there are actually a lot of them, and for us to use the economical calendar properly, we need to make several settings. So first of all, we should set the events that we are willing to monitor, that we are willing to check before it comes. So as you can see, there are different type of impact. So let's say there is no interest in let's say watching the low impact news, because usually the low impact news, that kind of news that do not cause a lot of significant movement on the market, so we will remove that type of news, as well as the medium news impact. So and let's only check the currencies, the major currencies, simply for us to have the best opportunities and to work with, let's say, the most popular pairs and with the most strong news that probably will give us the good outcome. Right now, we can see after we made the settings, we can see that the amount of news reduced drastically, and actually right now we see only the important news and only the news that will have the significant impact on the market. Actually, you may set the time zone exactly where you are. So let's say leave it like GMT plus 2, and you will find the exact time where you need to stay near your computer and when exactly you need to pay more attention to the market before those kind of reports will come in. So there are several strategies, there are different news events that you may trade with, and in our upcoming videos we will definitely discuss that topic more clearly, just to understand what kind of reports and what kind of news it is better to trade with, what kind of news it is better simply to avoid. But for us to have all that discussion, we will proceed in our upcoming videos. So just right now, simply let's have a look on the chart and simply identify what kind of movements were caused by the specific news events. So here we just looking at the Euro USD, and I depicted a few news that were published. You see the red ones, the high impact news, and after the news we have the price reaction. News were published here, we have the price reaction. After this news, the price reaction, and so on and so forth. So basically, this is the approach that you may use as well, let's say as the single and as the one approach to analyze the market if you have, let's say, limited time, or you may easily combine that with your technical trading, because from my experience and from my opinion, the best way, when your both wheels are riding well and you are simply using the two approaches by combining them and actually making your trading more efficient and making the efficiency of your trading account much more higher. So those are the basics what you should understand and you should follow before making anything and any trading decisions. Okay, so one more thing that we should discuss today, and actually this is the thing that from my opinion is really under evaluated, because a lot of traders do not pay a lot of attention to exactly what is the cost of the trade and how it is necessary and how it is properly to calculate your potential profits and how to properly calculate the risk that you may take within the single trade. So for that, we also will have the example here with the Euro USD. We have usually two. We have two prices. We have the sell price and we have the buy price. The sell price, also called and also known as the bid price, is the price at which you can sell the currency, and the buy price is the ask price at which you can buy the currency. So as you can see, there is a difference between the sell price and between the buy price, between the bid and between the ask. So this difference is called the spread, and this is something that you always need to pay attention while trading, because all the spreads on the market, they are floating and they may change dependently from the currency you are trading with, or let's say from the time when you are trading with. And that is why on the major currency pairs, since those pairs are the most popular, the spread usually the lowest one. But for example, if you're working with the minor pairs or with the exotic ones, the spread on those pairs usually significantly bigger. So this is what you need to control, and that is what you need to pay attention when you're placing your trade and where you're trading with a particular instrument. The other thing that also is really important is the volume size, and actually the amount of the position that you are willing to take when you're entering the market. So basically, when you're working and trading with one full lot, it is considered to be 100,000 units of the currency. So for example, if you wish to trade, if you wish to buy euro with the one full lot, that means that actually you are buying 100,000 units of the currency while working with the one lot. And as you can see, the price usually changes for the small amount, the minimal amount here. It is called the pips, the minimal price change, and it is actually calculated by the fifth digit after the comma. So this is the way how the price changes within the time, and this is the minimal change of the price within the time. So how it is possible actually to calculate what is the pip for you when you're entering the position? Actually, it is really easy. All you need to do is simply multiply the amount of units you are trading right now and multiply them by 0 by the minimal price change. So we have the 4 zeros and 1. So we need to multiply 100,000 by 0, 401, and we will get $1. So that means that the minimal price change, that the minimal pip value when you are working with the one full lot size costs you $1. And for example, if we take the uh, trade, if you willing, let's say, to buy the euro USD with the rate of 1.11200, and you wish to leave the trade when the price uh, goes to the rate of 1.11300. The difference is 100 pips, and if you're trading with a full lot with the cost of the pip $1, that means that your potential profit in that trade could be $100. So that is easy as it is. Simply by calculating the pip value, you could easily control exactly the amount of profits that you may gain within the trade, and actually to calculate amount of risk that you may take within the single trade by simply evaluating what the pip cost would be in your particular trade. And the lot size, it is something that you may change here, and you may actually use, let's say, 0.01. It is the smallest volume size possible for you to open the position, and in that case your pip value will be only 1 cent. Since you are trading already with not the full lot, you're only trading with the part of it, and actually only with the decimal with the 0.01 of that one lot. So when you are working with that volume, your pip value will be only 1 cent. And for example, as we looked for the previous 100 pips movement, in that case, when you are working with 0.01, your profit will be only $1. And for example, if you work with the volume size 0.1, that means that the value of the pip will be 10 cents, and the trade for 100 pips actually will give you the potential of $10 profit. So those are the basics of how you may make that kind of calculations, and dependently from the currency pair that you are trading, the value of the pip may change. Let's say if you are trading the major, if you are trading the cross currency pairs, or if you are trading the exotic currency pairs, the price of the pip will vary from pair to pair. But in overall, when you're working with majors, you simply may remember that when you're working with the one lot, your pip cost is only $1, and dependently from the volume you choose, you simply make that adjustments while making the calculations. So one more thing that is actually need to be discussed today, and actually that is really important to understand before going live or before starting any trading activities, is what is the leverage and what is the margin, because those are the terms that actually helps you a lot and helps you to understand what exactly is going on and how you may manage your investment and how you may work with the capital that you have on your account. So let's make an example as well. Uh, let's say you are going to the gym and you are planning to lift some weights, right? And you consider that some of the weights might be way too difficult for you to work with, and you ask for the help for your trainer, or maybe you will make the exercise using the another exercise machine where you could easily take that weight. So actually leverage works the same way. It's just the instrument that helps you to increase the capital, increase your investment, so that you could trade with the forex market. So as we discussed, the forex is the place with the billions, with the trillions daily volumes, and definitely it requires the money, it requires the funds to work with and to trade with. And probably not, it is not easy to have the big account from the very beginning. So that is why the leverage is exactly the tool that may give you that opportunity simply to join the market and to place your trade. So just forex, let's say you have the $100 investment on your account, and you may take the leverage up 1 to 3,000. So that basically means that with your investment of $100, you are capable to place the trades with the overall volume of $300,000. So just imagine that you have this opportunity simply by using the leverage. And let's say if you're working with the leverage that is smaller than 1 to 3,000, let's say you are working with the investment of $1,000 and you are taking the leverage of 1 to 100. Basically, you're also increasing the capital that you are working with, you're increasing it, and you have the potential of trading with the volume of $100,000. And the margin is something that really connected with leverage, because actually margin is something that you need to open the trade and to maintain the trade while it's open. And basically margin depends from your leverage. So if you have the bigger leverage, on your account, the smaller margin is required for you to open the position. Margin usually calculated automatically, and it is depicted in your MetaTrader platform. So in future also we will have the specific topic, the specific discussion about the margin, how it is calculated, because also there are several ways and several approaches that used to make this. There is a margin level, there is the pre-margin level. So all of that we will definitely discuss later. So for now, not for you not to overwhelm you with all the information from the very beginning. This is like the basics that actually we would like to discuss with you today. And uh, maybe you are interested what might be your further steps, what exactly after you should know, and what exactly you may do after after our webinar. So first of all, what I may suggest is simply complete the verification of your trading account if you didn't do that. So please complete that, because without the verification of your account, you won't be able to make the investment, you won't be able to withdraw the profits that you make. So this is the first thing that you need to do before starting your trading and starting working with the market. Other thing, it is highly advisable simply to go through the educational materials that we also have on our website. They're absolutely free, they're absolutely for you. The link where to find that materials is in the description to the video. So simply look through the materials, look through the articles, just for you to get the bigger picture, for you to understand what exactly you may use to learn it more specifically. Definitely you may watch this video again in future. It will be available by the link for you. You may just simply rewind the materials and look for it. And actually the key point here is simply start practicing, start implementing all the knowledges that you have, that probably you already have, probably you already made some researches. So the trading is the kind of activities that actually needs a lot of dedication and a lot of time to practice. So the earlier you start doing that, the better it will be for you, just simply to understand and simply get the skills of the professional trader. Because trading actually is the business, and it requires your specific correct attitude. And when you will start doing that, the earlier the better it will be for you. And our goal actually is to help you with that. So you may easily subscribe to our channel. You will follow up all the upcoming videos with us. That is actually everything I would like to share with you today. And if you have anything that you would like to ask, if you have any questions that are left, I will go through the questions right now and we'll try to answer them immediately. So let's have a look what we have. Maybe you can write them specifically right now. So let them just going through. Oh, thank you for the positive feedback, Israel. Thank you. We're doing our best. Yeah, sure, sure. The presentation will be available as well for you. We will send it over the email for everyone who wants, so it's not a problem. It is available. Everything will be there. Tiboho, can you please explain 100 or 10 pips? What exactly do you mean? On the example that we've watched with the Euro USD, we were calculating 100 pips because all the quotations are the 5 decimal. So we are calculating the fifth point after the comma. So yeah, that in that example, we are talking about 100 pips. How did I get 100 pips? Okay, let me simply, because we are using the 5 decimals, right? So we had an example of 1, 1, 2, 0, 0, right? This was the entry price, 5 figures after comma. And this is the level where we entered the market, right? And this is the price when we decided to close our position, right? And leave the market. So if we simply calculate this 300 minus 200, we will get 100 pips available as your profit. So we are calculating in the 5 decimals. That is why it is 100 pips. For example, for the quotations of the 4 decimals, yeah, it would be 10 pips. But for now, it's in the example that we discussed, it was the 5 decimals, so the 100 pips, particular and potential profit. You're welcome, Tiboho. Maybe any questions left? I'm still here, so please feel free to ask me anything. Maybe there are some topics that you already know that you would like to discuss, so you simply may leave the comments below the video. We will try to do our best to provide you with the best content available. But if there is no questions for now, I'm really Oops. Yeah, I see. Yes, is the one leverage a healthy one? Eugene, sorry if I pronounce your name incorrectly. I'm sorry for that. Eugene, let's, 1 to 3,000 actually is the really aggressive leverage, and this is something that I, as a trader myself, suggest to use for those who have the experience in trading. And for my experience, it is better to start with something like 1 to 100 and 1 to 500. It is the maximum. So actually, 1 to 3,000 leverage is something that is really aggressive, and it is for the actually traders who do understand how to properly manage the account and how to properly use the volumes, because the bigger the leverage, the higher the potential profits that you may get. But definitely there is the point that you may simply increase the risk when you are working with that volume. So for the beginners, my suggestion is simply to work with something not higher than 1 to 100, maybe 1 to 500. This is the maximum. Yeah, and it is correct because we have that opportunity and we have that option for the client. You may easily choose 1 to 3,000 leverage and work with it, test it. So, yeah, you're welcome. You're welcome, all guys. Thank you. Thanks a lot for joining us today. Hopefully, you find that webinar useful, and in future, we're planning to provide you with even more useful content, even more professional materials, simply for you to be the better traders. So don't forget to subscribe. Don't forget to stay tuned to all upcoming events. Check our social media. Subscribe to the Telegram, to Instagram, everything we have. And definitely we will stay in touch and hope to see you soon. Take care. Stay safe. Bye bye.